This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's oil demand growth is expected to remain weak in 2025 despite recent stimulus measures from Beijing as the world's number 2 economy electrifies its car fleet and grows at a slower pace, the head of the International Energy Agency said on Monday. China, which has accounted for more than 60% of global oil demand growth in the last decade when its economy grew at 6.1% on average, is slowing down. IEA Executive Director Fatih Birol told Reuters on the sidelines of the Singapore International Energy Week conference. The Chinese economy at around 4% growth or so would mean China will need less and less energy, he said, adding that demand for electric vehicles, which have become cost competitive against conventional cars, will continue to grow.
China's fuel oil imports climbed 6% month-on-month in September, customs data showed on Sunday. September imports totaled 2.01 million metric tons, or about 260,246 barrels per day, based on data from the General Administration of Customs. In anticipation of a tax revamp, some refiners accelerated their purchases ahead of its implementation as the revamp will raise costs for imported fuel oil, trade sources said. The import volume included purchases under ordinary trade, which are subject to import duty and consumption tax, as well as imports into bonded storage.
Moving on to the top news in the energy sector.
Egypt has revised its renewable energy target for 2040 down to 40% from a previous goal of 58%, Petroleum Minister Karim Badawi said on Sunday, underscoring that natural gas will remain a key part of the country's energy mix for years. Before hosting the COP27 Climate Summit in 2022, Egypt pledged to raise renewable energy production to 42% of its energy mix by 2035, later advancing that target to 2030. This is a message to all of us to work together to increase discoveries and attract more investments through the bids being offered for exploration, aiming to achieve new discoveries in the region, which holds more wealth, particularly natural gas, Badawi said in the opening session of the Mediterranean Energy Conference 2024.
China's coal imports from Russia sank 86% in September from the same month a year earlier, customs data showed on Sunday, as sanctions on Moscow continued to weigh. Russia's coal shipments to China last month were 1.3 million metric tons, according to the General Administration of Customs. That was also down from 8.7 million tons in August. Russian Prime Minister Mikhail Mishustin told Chinese Premier Li Qiang on Wednesday that the bilateral energy partnership was comprehensive and had acquired a strategic character, mentioning coal as well as oil, gas and nuclear. Next, we have the top news in metal markets. Gold rallied for a fifth straight day on Monday, hitting a record high on uncertainties around the U.S. election, ongoing Middle East tensions, and expectations of central banks' interest rate cuts, while silver hit a near 12-year peak. Spot gold gained 0.5% to $2,733.50 per ounce, as of 0910 GMT, after hitting an all-time high of $2,733.82 earlier in the day. U.S. gold futures were 0.7% higher at $2,748.20. The uncertainty of the U.S. presidential election outcome is one factor supporting hedging demand for gold. The other probably are the geopolitical tensions in the Middle East, UBS analyst Giovanni Stanovo said.
Copper prices climbed to one-week highs on Monday as interest rate cuts in China raised hopes of stronger demand in the top consumer amid persistent worries about the country's ailing property sector. Benchmark copper on the London Metal Exchange was up 0.8% at $9,707 a metric ton at 0935 GMT from an earlier session peak at $9,758. China's rate cuts were anticipated, but the 25 basis point cut was larger than the consensus and follows reductions to other policy rates last month as part of a package of stimulus measures to revive the economy.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures edged higher on Monday, after 2 sessions of decline, underpinned by higher export estimates and anticipated seasonal palm production declines. The benchmark palm oil contract for January delivery on the Bursa Malaysia Derivatives Exchange gained 49 ringgit, or 1.15%, to 4,304 ringgit, $1,001.16, a metric ton during the midday break. The contract fell 1.3% in the last 2 consecutive sessions. Palm prices today are reacting towards better export estimates and expectations of weaker output in the coming weeks in line with seasonal weakness, said David Ng, a proprietary trader at Kuala Lumpur-based trading firm Iceberg XSDNBHD.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.